Every empire has a currency that defines its power. For the British, it was the pound. For America, the dollar. And for China, it might soon be gold. Sounds familiar?
Since 1944, the US dollar has been the backbone of the global financial system. Oil trades, global debt, international reserves, all priced in dollars. But something's changing, quietly, strategically. China is hoarding gold more than any nation admits, and it's not by accident. It's part of a long-term strategy to replace the dollar's dominance with a new standard, one backed by real assets.
To understand China's play, we need to rewind. In 1944, after World War II, the Allies gathered at Bretton Woods. They created a system where currencies were pegged to the US dollar, and the dollar was pegged to gold at $35 per ounce. It made the dollar as good as gold, literally. But by 1971, the United States had printed too many dollars and not enough gold to back them. So President Richard Nixon did the unthinkable. He ended the gold standard, severing the link between money and metal. From that moment on, the dollar became backed by nothing but trust and America's global influence.
To maintain power, the US created the petrodollar system. Oil-producing nations, especially Saudi Arabia, agreed to sell oil only in dollars. In return, America offered military protection. That deal cemented the dollar's global dominance for decades. But now, that foundation is cracking.
Since the 2008 financial crisis, China has been buying gold aggressively through state banks, private entities, and quiet imports from Switzerland, Russia, and Africa. Officially, China reports around 2,000 tons of gold. Unofficially, analysts believe it could be over 20,000 tons, hitting through state-controlled entities. Why? Because gold isn't just a shiny metal. It's economic insurance and a weapon. In 2023, BRICS, Brazil, Russia, India, China, and South Africa announced plans for a gold-backed trade currency. Not a direct replacement for the dollar, yet, but a signal to the world. We can trade without Washington. This move threatens the petrodollar system, and by extension, US power.
If China succeeds in building a gold-backed system, several things will happen. First, US dollar demand will drop. Nations won't need to hold as many dollars for trade. Second, America's inflation risk increases. When fewer countries buy US debt, the dollar weakens. Third, gold becomes the new reserve king. The very asset the US abandoned in 1971 could return as the foundation of a new world order.
This isn't a war with bombs or bullets. It's a war of currencies and confidence. China's betting that the next superpower won't be the one with the most aircraft carriers, but the one with the most gold.
In Part 2, we'll dive into how China's digital yuan and gold reserves connect, and how this combination could dismantle the dollar system from within. Because history doesn't repeat, it rhymes. And right now, the tune sounds golden.